That was the United States. Here in the UK, the cost of borrowing is to be kept on hold. The Bank of England has decided to keep headline interest rates at their record low of 0.1%. There are fears that rising food and fuel bills are causing a cost of living crisis for many households. Let's talk now to Marc Ostwald, who is Chief Economist and Global Strategist at ADM Investor Services. Thanks very much indeed for being with us on the programme today. So the Bank of England, of course, widely expected to raise interest rates today, but instead they kept them on hold. So what's it thinking?
Well, I think the first thing to say is the Bank of England is leading everyone a very merry dance. Mr. Bailey's predecessor was called an unreliable boyfriend, and this looks like unreliable boyfriend 2.0. Fundamentally, the Bank of England could have actually not signalled that it was going to hike rates today a couple of weeks ago, because the points that they made, which are basically hindering them, or rather making them cautious about raising rates at the moment, is there's still a very uncertain outlook for the labour market. They're not really quite sure what the impact of the end of the furlough scheme, on which there were still 1 million people at the end of the scheme at the end of September. They're concerned about the weakening consumer demand, and they're also actually quite fully aware that actually hiking interest rates to try and choke off food and energy inflation, which they can do, which will have little impact on that food and energy inflation, is probably not a great tactic, particularly if you don't know what's actually happening with consumer spending, services spending, not particularly encouraging at the moment, and obviously services account for roughly about 80% of the UK economy. So they've stepped back a bit, but they're still basically signalling that there's going to be a rate hike early next year.
Well, let's focus on inflation for a minute. It is, of course, well above the target already, and this risks it spiralling even further, doesn't it? The bank suggested 5%, so that must be a concern for people, surely.
It is going to be a concern, and it is very much as you put it, a cost of living crisis, because all these pressures that we've got in the UK, and indeed in most parts of the world, are in what one would call non-discretionary areas, i.e. the areas which we all have to spend money on: food, energy, housing. Now, the housing part, one can probably blame most of the central banks around the world for creating a lot of asset price inflation. But the food and energy part, there's little that they can do about. And the bank did actually warn that actually there are still considerable upside risks in terms of energy prices. And I couldn't help but concur. Interestingly enough, OPEC Plus today were making the observation that actually the high cost of oil actually has much more to do with the high cost of coal, of natural gas, and it's a spillover or trickle-down effect into the oil market. And that could keep oil prices at a very elevated level, and inflation thereby at a fairly elevated level.
We did see a big fall in sterling when the news came out. Is this a shambles, as one former MPC member called it?
It is a complete and utter shambles. I mean, their credibility was already threadbare before this, but having yet again gone to one of these moments where they've signalled, this happened on the Marc as well, where they've basically signalled we have to take action. Mr. Bailey tried to backpedal on that. He said, no, it was conditional. No, it wasn't conditional at all. He basically said we have to take action just 2 weeks ago, and then they take no action. The problem is that it puts a risk premium on UK interest rates, and thereby on sterling in the foreign exchange markets, because people don't know which way they're going to jump. They've become unpredictable in an era, we were talking earlier about the Federal Reserve, where this guidance, whether one likes it or not, is an important part of monetary policy, and they're making a total mess of it.
Marc Ostwald from ADM Investor Services, great to have you on the programme today. Thanks for joining us.